Farm for Profit Podcast. Take a listen, have a blast. Farm for Profit Podcast. Learn about farming while having a laugh. Farm for Profit Podcast.
Have you signed up for crop insurance yet this year?
I have not. It's that time, though.
Do you know what you're going to elect? Is that what it's called, elect? Do you elect your crop insurance?
No.
It's a purchase.
Well,
right?
I mean, you have crop insurance, and then you have programs that you elect. And I'm going to be honest with you, it's one of my least favorite things to do on the farm.
Oh, great. So way to start this show off on a high note.
But it's good that we're here to talk about it because hopefully this makes it easier for you to decide.
So it's been a while, but this guest was on our podcast during the Drake Show episodes.
That's correct.
So actually one of the things that launched this podcast, Ryan Bennis was a part of. So welcome back to the podcast. It's only been 2.5 years?
That seems like that,
Yeah.
August of 2020.
Oh, It's been 4 years.
Well,
3.5.
4 calendar years. Yeah, 3.5.
Jiminy
Yes.
Christmas.
It's hard to count.
Yeah, we did that 2-part Drake Show series, and that really kind of kicked off the beginning of our growth.
Wow.
So appreciate your contributions there, and we're hoping you don't let us down this time.
Okay. Sounds good. Well, we're going to try and make crop insurance as exciting as possible.
Yeah.
Which I think we can do.
All right, so start off. Who are you? What's your role with Farmers Mutual Hail?
My name is Ryan Bennis, and I am a regional sales manager for the company, which means I work mostly with the agents that talk with farmers about crop insurance. I cover an area that covers most of the Corn Belt, and I've worked with farmers as far west as Colorado and as far east as Kentucky, Ohio. So I get to see a lot, but mostly just working. This is my heart of my sales season. This is the most busy I get as a run up to, say, the 5-6 weeks before sales closing date, which is March 15th.
March 15th. That's the date we need to know.
That's the date you need to know.
All right, so note to self, put this show out before March 14th.
That's right. Now, I will say there are some places where they have earlier sales closing dates, right? We get into an Iowa mode here, but if you go further south, they have already had some sales closing dates pass.
Wow.
And places like Arkansas, they'll have their sales closing date on February 28th.
Just because they have a earlier growing season.
Exactly. Mm-hmm. Yep. Plant goes in the ground earlier, so they have to make that decision earlier, pretty much.
Has it always been March 15th for Iowa?
It has always been March 15th as far as I know. But, I don't go back that far.
Right. Right.
So,
Okay.
yes.
That's pretty good. So Ryan and I grew up together.
Mm-hmm.
Not our entire childhood, because you took off and left us.
That's right. Moved to the big city.
Out of our small town. And he's sitting here in studio with us, which was kind of neat because he crossed paths with another Northwest Iowa gentleman. We got to kind of reflect and reminisce back on sports that don't matter anymore, but they did
Right.
back then.
and the no longer around Aurelia Bulldogs.
That's right.
So
how do you go from Northwest Iowa to be a Hawkeye fan? Because shouldn't that be like
you
an
know
Iowa
what?
State
I
thing?
have to give my mother all the credit. She was a huge Hawkeye fan, and you just gave me the chance to shout out my mom on the podcast.
There we go.
She's
There
gonna
we
love
go.
me. But she was always a huge Hawkeye fan, so I drifted towards her because my dad was a Wolverines fan, and I wasn't having any of that. So went for the Hawkeyes.
I guess you made the right decision there.
The classroom, I think, whenever we do our Iowa State fans and Hawkeye fans, there were not very many Hawkeye fans in Northwest Iowa.
No.
Ryan was one of the few.
There was a brief stint I was a Hawkeye fan. You know that?
What?
Because they were winning.
In basketball, football, or both?
Everything. I think that's why there's so many people that are Hawkeye fans that didn't go to the school.
Okay.
Right? Like, so that's one of the things that we always talk about, like, oh, you're a Hawkeye fan. Did you go to Iowa? No,
Yeah.
no.
Well,
Did you go to Iowa State? Yes.
You know what that means? That just means a whole lot of people had a choice, and they didn't choose Iowa State.
Right. But I have several buddies that went to Iowa State because it was the more convenient school, or it had their, it was
Sure.
agriculture or whatever, but they were Hawkeye fans.
Ah.
And they still root for Hawkeyes. And it's like, how could you do that after you go to the school?
Right.
But
That would be tougher.
yeah, it's kind of interesting. So we're not here to talk sports.
We're not. I bet you it'd be a little bit more entertaining. I'm kidding. I keep downplaying
All right.
crop insurance side
Let's
of this.
talk Iowa basketball.
No. We're going to move on.
Men's.
Hey, I thought we were trying to make this interesting.
Going to move on from this. So this, we could talk Super Bowl, but this is going to come out after the Super Bowl.
Okay.
So we might have to close the show with a Super Bowl prediction.
So congratulations to Brock Purdy.
Yeah, the 49ers.
Yeah.
This was an interesting question. I know we're off topic.
No, this is great. This
but
is how
we're
it's
off
supposed
topic.
to go.
But do you think there are more Hawkeye or more people from Iowa rooting for the 49ers or the Chiefs this week?
I think there's a lot of torn households.
I think a lot of torn individuals. A lot of people are Chiefs fans, but Iowa State fans.
Yeah.
And love Brock Purdy. Same thing with George Kittle.
Right?
You know, like,
I mean, I'm a huge George Kittle fan.
yeah.
And I
sure.
wasn't before.
He's the man.
I mean, literally it's fun watching him and Brock play together.
Yep.
Yeah.
So I don't know. I bet it's like split right down the middle.
I think at the end of the day, I'm leaning Chiefs, but I get it from a Cyclones perspective. It'd be a tough one.
It's a win-win, right?
Well, that's the way the Niners-Lions game was.
Yeah.
I wanted Brock to win, but if David Montgomery got to the Super Bowl, that'd be pretty cool.
Yeah, and he did good in that game.
Mm-hmm.
Yep.
Yeah.
He was running like a beast.
Yeah. Okay, now we'll talk crop
Okay,
insurance.
okay.
The title is going to say something about crop insurance, and we haven't said anything about crop insurance yet. But yes, this episode's going to come out the day after the Super Bowl. So
Okay.
That'll be a good thing for us to keep in our closing comments.
Okay.
You said something before we started when we asked you what the biggest change was year over year.
Yes.
What is the biggest change from 23 to 24?
The biggest change is the one that everybody's feeling right now, which is the decline in our commodity prices, right? And so from a farmer's perspective, when you're sitting down with your agent this year, hopefully you're getting a quote, and in that quote you're going to see the different levels options, and then there's the most important number on there is that guarantee per acre. How much are you guaranteeing yourself on a per acre basis? Last year when we did this, if you're buying an 85% policy in Iowa and your APH was 220, you had $1,100 a guarantee. If we bought the same thing this year, it's $895.
Whoa. Let's repeat those.
$1,100 versus $895. So the goal is to try, at least a good crop insurance agent working with a farmer, the goal is to try to get to a level where we can cover our input costs. Mm-hmm. We could do that last year. This year it's going to be tough. It's going to be really tough. So that's the biggest change.
Inputs have come down quite a bit. So they're helping it there, but it doesn't seem like seed doesn't want to come down. Mm-hmm. Rents certainly don't seem like they're coming down. Like those are some things that lag, which seed never goes down. It's always higher. But rents just seem to lag a year or two behind.
Yep.
I know fertilizer, anhydrous, and your dries have come down. Interest has gone up. So there's a lot of things offsetting, I guess.
Sure. And I guess the good news is because of that decline in the guarantees, you are going to see premiums go down. So if you're buying the same thing as you did last year, premiums are going to be down 15, 20% for both corn and beans. That said, I think it would behoove most farmers to think about what it might take to buy up a level. And I could be disagreed with here, but when we're going into a season with tighter margins, if you buy more insurance, you are essentially raising your floor, but you're lowering your ceiling at the same time, right? And so when you walk into a year with tighter margins, do you want a higher floor or do you want a higher ceiling?
It's got to be a lot of personality based, right?
I think so.
Because Corey can withstand way more risk than I can. At least it appears as though he's a little more risk.
Fake it till you make it. Tanner just. Oh my audio's going back and forth. Tanner's just a lot more conservative on the surface.
On the surface. That's what it is. It's your shirt. Yeah. No, but that's probably a lot of each individual personality, but then probably also each individual financial position.
Exactly. Everybody's got a different mix. Are you renting all your ground? Do you own some of your ground? I mean, your risk profile is going to differ every farmer. And so that's, those are the first two questions I think a good insurance agent would ask a farmer is, what's your cost of production and what is your risk tolerance off of that? So if my cost is $900, then I say I could stand to lose up to $50 an acre. So now we're hunting for a level of coverage that gets us to $850
right,
or better. That's what we're doing. Hopefully we're not in a position where we're looking at red numbers when in terms of levels of guarantee versus costs.
Yep.
But unfortunately, I think that's what it's going to look like for most farmers.
But this is all about mitigating risk. You're not looking to get rich off of crop insurance or anything like that. It's a safety net. And I think our buddy Snark, Rupert from Go Farm Yourself, said it's a subsidized option, basically. Or,
it's a subsidized
basically,
put.
it's the cheapest put that you can get. So you need to.
Yeah.
You might as well be doing it.
And I'll tell you, so we could all debate who needs what policy. We could all debate whether you need to buy up and buy everything or not. But the nature of crop insurance is that because it's subsidized, over a long period of time, farmers should get more back than they put in. I'll kind of break it down for you. The government sets a target loss ratio for us at 88%. So 88 cents on every dollar goes back to farmers, okay? But the dollar that goes in terms of premium, that dollar is split. The government pays part of it and the farmers pay part of it. And it's farmers share that's about 40%. So year over year, farmers are paying in 40% of this dollar and they're getting 88 cents back out. Okay? So that's going to be spread around to every farmer across the U.S. So you could go, 10 years without getting a payment. That's a possibility. But if you're sticking with the program long enough, it should pay you back more than you pay in.
Right. One of the biggest arguments we always get on social media is the subsidies. People are, we shouldn't be subsidizing farmers, and probably one of the biggest subsidies is insurance, right?
Mm-hmm.
Can you speak on any level of why it's important, or should we just go Wild West and not have it?
I think that the biggest reason is the whole point of the program is to keep farmers in business. Okay, we're trying to keep farmers from going out of business, having those, one or two disaster years in a row, and we can't do it anymore, and all of a sudden we just have fewer acres in production, right? So the subsidy is to encourage farmers to buy up to a level that they won't be harming themselves if we have a disaster. Mm-hmm. And without the subsidy, you start talking about what the cost of insurance looks like, you'd be a lot more gun shy by buying 75, 80, 85%.
What do you think
level.
is the portion of subsidies?
So like a 75% level, which is probably the most common one written across the whole U.S., the government pays 77% of that premium.
77%.
So
On $1, 77 cents.
that's
You
right.
pay 33.
23. Is he a banker?
Not anymore.
No?
Not anymore.
Can't
You
do
don't
that.
bank anymore. You can't count.
That's right. Camp calculators. But that's a great perspective as to the purpose of it, right?
Mm-hmm.
And it's going to be something that our listeners need to pay a lot more attention to this year, since they really are going to pay attention to that break even.
Mm-hmm.
Is this something that they could save money on to help lower their break even? Is there a way to put a structure together?
Sure. So yeah, I think naturally farmers want to find ways to save some money when it comes to crop insurance. As we kind of went through at the beginning, it might be a little dangerous to back off of where we're at today just because we're already in a bad spot in comparison to our input costs. That said, there are some policies, and mainly just one, that you can use to cheapen up your policy, and that's SCO. SCO is supplemental coverage option. It is subsidized a little higher level than your 80 and 85% are. And with SCO, the big drawback, though, is that we're relying on the county to trigger that. So, if I buy a 75% policy, SCO gives me coverage from 75 up to 86. But the only way I can collect on that chunk is if the county final revenues come below 86%. And there's some other gotchas there too, because if you go the route of SCO, you also cannot elect our county, which is at the FSA office. So there's a tie-in between crop insurance and FSA that says you can't have both of those. And really, it's because
if the county took a loss,
yes,
you'd be double dipping.
Yeah, and essentially, yes. The programs work differently. They use different prices, but they're similar enough that they basically make farmers choose. Do you want Ark County or do you want SCO? And so if I were to buy SCO on top of a 75% policy, gets me to 86%, that's a lot cheaper than if I were just to buy 85 by itself.
So that could be an option to
It's
lower
an
the
option.
cost.
I will say I'm not recommending that in any way because
Yeah.
you're deferring your payment then towards the county. And if you have some more variable ground or there for some reason that you just can't suffer a loss and not have a payment to show for it, that's a little more of a dangerous game is relying on the county.
So
What
does
was-
Farmer Mutual Hail do anything with ARC or PLC other than we just can't sell it if you have this or that?
We do. I definitely think we've dug in a lot on it just to because you're making the comparison, right? What's the better deal? Do I elect this free program at FSA, which is based off of their base acres, or do we purchase, albeit cheap, but still has a cost associated with it on SCO, which is based off planted acres instead of our base acres. And there's some other factors in there too. But yes, we do dig in and do a little evaluation.
Because we're in the middle of that season right now too. We can elect between these two.
Correct.
And that's
And the
So-
alternative being PLC at the FSA office, right? We love our acronyms here.
Yes.
Right.
Yes.
I'm writing all the acronyms down. But this
Yes.
So when I said this is my least favorite thing to do, it's electing those crop insurance. So I get that, whatever. But I hate trying to figure that out.
But
I
you
don't know
hope
what
that
it
you
is.
don't
Well,
use any of it, right?
Right.
Yeah.
So to answer your question, let's set SCO aside for a second.
Yep.
Right now, unless things change dramatically in the next 5-6 weeks, most farmers are going to want to elect Arc County at the FSA office for corn and beans. It not only has better prices than what PLC offer, but it has a yield element to it. So if we suffer a yield loss across the county, we're going to get paid off of that through Arc County. And that's not to say that PLC couldn't pay, but at the moment, it looks like Arc County is the better choice.
So why
between the
would
two.
someone pick PLC?
Well, for one, so that they can get SCO, right? And then secondly, the PLC program does perform well when we get into very low price environments because Arc County, you could still out yield a price drop. But at this point, we're not to the PLC price levels. For instance, the PLC trigger point on corn is 401. So we would have to have what they call the marketing year average price, which is like an average of cash prices across the nation. That would have to fall below 401. And at this point, doesn't look super likely, but we're just keep going in the wrong direction.
I don't know.
So
They're
doesn't
going
have
to
to-
zero.
Doesn't have to get there just one day. It's got to be an average for the
it's an
marketing
average
year.
for the marketing
But
year.
we're 1 month in and we've been in the mid fours.
And actually, that marketing year doesn't even start until September 1st. So for the FSA programs, that marketing year doesn't start until September 1st, and it runs all the way until August
Heck, we could be at $2 by then.
of 24 or 25. Yeah, you don't know.
That's true.
Huh. When are we setting our spring price?
Spring price will be set in February. So
So we started.
we have
It's
started. We
February
have now 2 days under our belt. Of course, by the time this is released, we'll have
12 days.
We'll be well enough in that we'll be able to basically say where the prices are going to be. But yeah, we discover those in the month of February, and then we have a full 2, 3, 4 weeks to quote based off those numbers and make our decisions.
And according to the groundhog, we got
Early spring.
Yeah, short
That's
winter.
right.
So
Well, it kind of feels like that today, doesn't it?
yeah, it was sunny this morning. And I swear.
Is that why you're wearing this shirt?
Yeah, exactly. It's summertime.
You felt tropical,
Yep.
That's right.
which our next guest coming in thinks it's cold out.
Yep.
Uh-oh.
It has gotten cold
Southerner.
today. She's from Australia.
Oh, fair
Really
enough.
southern.
Yep.
Okay, so let's get back into
Sure.
we've talked SCO, which to remind
Yeah.
our listeners is supplemental coverage option.
You got it.
And that's a way that we can potentially lower our cost with still providing a percentage of protection at 86%, 85. So it might be a way to go that direction. Not necessarily recommended,
No.
but it could be an option to lower the cost of that level of coverage.
Correct. And I would say that kind of strategy probably works as you move outside the periphery of the I-states and you get into areas where 70 and a 75% level are more common. That's where that SCO is a really cheap way to buy up. Here, frankly, maybe you'll disagree with me, Corey, but 80 and 85% are cheap enough individually that to buy down a level and then buy SCO, generally you're not gaining enough savings to flip over to the county versus just relying on our own individual yields to trigger a claim.
Yep.
So
I would agree. I mean, it seems like 80, 85 is always seems to be a no-brainer for us, I guess.
Yep.
The only time I last year was the first time I ever actually took the minimum at 65%. Is that what the?
You can go as low as 50.
Really?
Or you could just take a cap policy, or you could just say you don't want to do it at all.
Okay. I have a farm that's pattern tiled and has irrigation, so I felt like my risk
You felt
was
invincible.
mitigated.
He did feel invincible, yes.
No, I did not, because it ended up, if I would have taken 85, I would have probably triggered.
Sure,
because
the price dropped.
Well, price dropped, and I can water my way through a drought. I can't water my way through 105-degree temperatures for 5 days in a row at the end of August when we're trying to grain fill, and a specific hybrid that doesn't like it,
and a crick that doesn't have any water in it,
and drops ears, which we're watering through that. We tried to water our way through it, and this particular hybrid, I had 20% of the ears dropped at beginning dent. That's 40% yield loss on those ears, and I still didn't do bad. But I was like, oh, I thought I was invincible.
Sure.
Well, no, it's not.
Sure.
Nope.
Well, and I think as I go around, price drop, which is something everybody felt in 23, it's not something we talk about a ton. We end up talking about more of our tangible losses, like something like ears dropping or wind or hail.
Yeah.
Right? Stuff you can see. But when the price goes down, $1 throughout the growing season, that's like you getting a 25% hailstorm on every acre that you have. Yet it doesn't feel as hurtful as if
Because everyone has to take it.
Yeah, exactly. Exactly.
Yep.
Exactly.
When you get hail, it's usually just your field or that area. And then,
Right.
Well, they didn't get hail, and they get,
Yep.
So I remember when we talked after the Drake show, you had stated that you expected wind and hail premiums to go up after these large
He
weather
said
events.
they were going up.
Yes.
Yeah.
They were already touted for the next several years to be
And
raising.
they did. So I think if I remember back to that, we were in. So every other year, most states go through a rate review, and so at that time we were escalating up, particularly our wind rates, and so they had gone up actually that year before the derecho, and then they went up not the year after, but the year after that. So I don't think we'll see any more of that. I think most of our hail and wind rates, not just in Iowa but across the board, are going to be very similar to what they have been.
1197, we all know it. The big P, whatever. I'm not going to say the name because they don't sponsor us. That particular hybrid, I know it single-handedly raised your guys' premiums, because that was guys' marketing plan. That thing had such a flex year, it would snap like 20%, and it would still flex out and do 250. But then that automatically paid, right? That for the ears on the ground, type of stuff.
Yep.
So guys were double dipping.
Yep.
And that's why you guys are losing money, in my opinion.
No.
And
That's
now
how it works.
1197 it's still around, but not as much. So now it needs to go back down.
Well, we'll talk in 10 years. Maybe it'll have.
He'll talk to his guy.
Yeah.
And let you know.
Yep.
Right.
But okay, so with wind and hail, we can buy that at any time prior to the event happening.
Pretty much. So on hail side, we're one of several crop insurance companies. So obviously the rules are not the same for everybody. But as a general rule, you can buy hail anytime. Wind, we, as an industry standard, usually you have to buy wind by mid to late June. And if you haven't bought it by the end of June, you are out of luck as buying wind coverage. So.
And out of luck is in no way possible, or you just got to beg and ask really nicely?
Out of luck. Now, I'm sure there's exceptions out there, Tanner, but I think it's, as a general rule, by the end of June, there's no more wind off.
So if we've got a long-range forecast and we can see 10 days out that there's a chance for hail, we could buy it?
Oh, yeah. In fact, and I'm going to say this as carefully as possible, but at FMH, we have a immediate hail coverage. So if you write a hail policy with us, and you write it at 9:30 in the morning, and it hails at 9:35, you're covered. Now that policy has to be submitted to us, but it is a unique thing that we offer as immediate coverage. Other companies, it's 2 hours or the next day, something like that. But even quicker than a 10-day forecast, you could look at the radar and technically make that purchase. Now, we recommend, and I think even for farmers, if you're going to buy something on August 1st, you might as well have bought it on March 1st, because then you have the full growing season that you don't have to battle, watching the radar. Mm-hmm. But that's how we do business, and frankly, for the most part, we don't see the loss ratio that much different from a farmer that's buying it on March 1st than the one that's buying it the hour before the storm.
Hail anymore seems to be so spotty. I feel like wind events are more widespread, but we can get hail at the farm, and you go 2 miles up the road, and you didn't get hail at that field.
Mm-hmm.
Yeah, we had 5 hail events, I think, last spring. I mean,
oh wow!
Through Slater and Huxley. I mean, your house had hail damage. Mine had some, not enough to, just kind of crazy.
Sure.
But I did want to ask, when you're talking hail and wind, I feel like there's all these like little loopholes. Like, hey, if you have a field fire during harvest, that's not covered under your regular crop insurance. Mm-hmm. But if you buy this fire or this hail or whatever, that covers field fires.
Yeah. Yeah, so the multi-peril policy, it's what they call an act of God policy. So any natural causes are what would be covered under the multi-peril policy. One of the unnatural causes that is common is a combine fire, right? And so if you have a combine fire, that is not said to be a natural cause of loss, so it's not covered under multi-peril. But if you have a hail policy, standard is that it would be covered under a hail policy.
Since that makes any sense. Hail's little balls of ice.
Well, what happens when it goes out of your crop into your neighbor's?
So that's an interesting question. For the most part, the answer is still no, it's not covered. But let's say all of a sudden we have a small fire that turns into a big fire because we have 40-mile-an-hour winds.
Mm-hmm. That's an act of God.
That's an act of God. And so at a certain point, it turns from an unnatural cause to a natural cause.
Combine fires never happen. I don't know why.
I still think combine fire could be an act of God. It's just the mechanic just.
I tell you what, on our farm, I feel like it is an act of God. It's like every 3 years.
Yeah. Yeah. What a stressful event. And then if you couldn't get it covered on top of that.
Oof.
I just wondered if it was a different, like, maybe your umbrella policy that you bought, not through your crop insurance, but like.
Yeah, that's a little bit out of my wheelhouse, but I know that, that gets challenged sometimes with farm policies as well.
Right.
So.
And I know those policies will take some time to pay, whereas crop insurance is usually pretty quick.
Yeah.
Yep.
So as our listeners are listening to Farm for Profit, right? Insurance isn't a profit building product. It's a profit protecting product. It's a business, it's insurance. It's what we're here to protect ourselves with.
Right. It was when you had 1197.
Actually, I was gonna. Well, and I was gonna say, not to push back too much, but I think in 22 and 23, it could have been a profit building mechanism, right? Because we're setting a floor that is now already above our costs, right? If we're willing to spend the money, we could have set a floor above our costs, in effect, guaranteeing us some money, right? But when we get into an environment where prices are depressed, we're just trying to stay as far out of the red as possible.
Right.
And crop insurance is going to be helpful doing that. You mentioned earlier about ways to cheapen up the policy and go in the way of SCO, and I would be remiss if I didn't talk about ways to buy up on your policy, because I'm in insurance sales, right?
Let's do it.
Right. So are these, so you're talking buy-ups. Are these subsidized as well, or are these like private products?
Yeah, we have kind of two different options, right? The main subsidized option that would be beyond 85% that you have the opportunity to buy here coming up for March 15th, that would be ECO. So ECO is the big brother of SCO. And ECO stands for Enhanced Coverage Option. ECO is not tied in with the FSA programs, so we don't have to worry about what we've elected over there. But ECO attaches at 95% of your county yield or revenue, and pays out in full once the yield or revenue for the county goes below 86%. That is a policy that definitely adds some expense, but that's also a policy that worked really well in 2023. When we had a big price drop of going from $591 down to $488, I think was our 2 crop insurance prices, that policy acted as a subsidized put, and a high majority of anybody that bought ECO on corn in 23 is going to get a payment on ECO.
Okay, so let me see if I'm following you here.
Yep.
It's 95% coverage.
Yes.
95% of your APH times your spring or fall price.
That's how much liability you get, but at the end of the day, the 95% is still triggered off the county, just the same way that SCO is.
Right. So let's say you're a super farmer and you have 100% of your APH, but the county's at 85%, so it's under your 86. You get paid in full?
Yes, correct. So if you have, if the county has a loss and you don't, you can still get paid. Yes.
So you could have made your full yield, maybe prices are suppressed, but you sell that, but you still get 95%?
Yeah. If the county triggers, that's all that matters.
Right.
Whatever you did on your farm doesn't matter. It does for the underlying policy, right? If you bought 80%, 85% with it, that matters for that policy. But the only thing that matters under ECO is how did the county perform. For most farmers, I think they would be surprised at how consistently they actually trend with the county.
Right.
But at the end of the day, yeah, it's possible that farmer doesn't actually experience a loss and still can get paid.
Well, I mean, I'll tell you, our main farm's in Polk County, and so we're split by Des Moines. And
Sure.
south of Des Moines and north of Des Moines are 2 very different
Sure.
climates for farming, and ground. So most of the time, south of drags our county yields down. Actually, last year they did pretty good, but that's where it's kind of interesting to see something like that.
Yeah. Yeah, most definitely. So that, just as ballpark numbers, and it does vary quite a bit as you go across the country, that adds $25 to $30 of premium, and you would gain, close to $100 of liability on corn, and it's available on beans as well. Costs would be cheaper there on beans, but definitely a way to protect price. And I look at ECO as, especially for the folks that have a tough time, and I know in 23 they did, if you have a tough time pulling the trigger on sales during the growing season, you need something that's protecting you against the price dropping during the growing season, right? And so that's what ECO does really well. And I'm sure you sold all your corn at $6 last year.
It was $5.98.
Okay.
We didn't do bad last. Yeah, the crop we got in the bin though, that sucks. We did okay. We did really good on our beans, I guess I should say. But yeah, wish I would have sold more corn.
Sure.
But we had more corn than we thought we would have when harvest too. So
Sure.
that plays a factor into it.
Yeah. And it's hard to be a market prognosticator because I'm in the insurance world, but everything seems to point towards if we have another good crop, there's not a whole lot that's propping up our prices right now. And it's feasible that we could be right around $4 come fall. And that price drop would be very similar to what we experienced in 23.
I was talking with the gentleman from the Iowa Corn Growers Association, and he was talking about that issue about trying to find other sources for demand. It was fascinating. We $1.8 billion bushel carry out could turn into 2.3 next year, but if the USDA projects trend line, we're looking at 2.7 to 2.9.
Right.
And that's not going to do well with prices. You're looking at way significant margins there for what you're sitting, to where some of this is really going to be important if we can at least lock in some sort of revenue as we put this together. But as crop insurance companies continue to build out private products, what are some more options that our listeners could look into?
Yeah, so ECO, although that comes with a bigger cost than maybe some of our other subsidized options, it is subsidized at almost 50%. We do have private product options then that are unsubsidized, and those run the full gamut. So we at FMH, we have RAMP, which is a fairly straightforward policy where you can kind of name your level and buy up as much as you want, but that's an unsubsidized price tag. And then we also have a couple of products that I get excited about, which are ECO Plus and SCO Plus. And so one of the concerns in writing a county plan is that for some reason I might suffer a loss individually that's not recognized in a county yield. And so what these plus products do are essentially give the farmer the higher of either their individual loss or the county loss. So they're paying a little extra premium to ensure that if I had that hailstorm or wind or had some disease or my ears started falling off of my corn, that even though the county still did well, I could get paid for that loss on a single unit or maybe a couple of units that suffered something. And so we're piggybacking those products off of subsidized ones. And so those tend to have a better value. I really love SCO Plus and ECO Plus personally, and that's what we've sold a lot of. Frankly, we're going to sell enough of those to probably sell out in some states.
That's a thing?
You can sell out of...
That's a thing.
They're private products.
It's private products. So we will intentionally hold back how much we're selling of a product just to reduce our exposure so we're not getting piled up in a single state. Because that's just how things tend to go, right? Most of the Midwest will be fine, but South Dakota has a disaster, or Kentucky, or Iowa. And Iowa hasn't had a disaster in a while, knock on wood. But aside
3.5 years.
Aside from derecho, I should say.
Yeah.
But long and short of it is, yes, we can limit the amount of private products that are written out there. So although I think these are good options and farmers should take a look at them, there's some places they may not be available.
And you mentioned RAMP, which is an
Yes.
acronym.
Yeah, it is. Sometimes we forget that. RAMP stands for Revenue Accelerator Max Protection. And that was my boss that came up with that one. So
Nice.
yes.
You guys just sit in rooms and think of what you call things.
We have
You
to
have no
acronyms.
idea.
we have to think of a 3-letter
All right,
word.
here are the alphabet. Here's the alphabet.
Yes.
We have to pick 3 of these or
Cat.
4 of these letters.
I need something that spells cat.
That's the thing.
Can we spell it with a K?
You can tell an acronym that was built to fit a word versus
Right.
an acronym that just was natural.
Yeah.
And I don't think RAMP was very natural. Just put it that way.
All right, so RAMP, it is what type of an extra product?
Yeah, so it works just like your multi-peril plan. So that's what it is. It is multi-peril coverage. Gets you up to as high as 95% trigger. Probably the most common RAMP policies that are sold today are bought from the 80% level up to 90. And so it effectively gives a farmer 90% coverage. And you can buy RAMP on an optional unit basis where we're covering each individual unit separately, and you can maintain your enterprise units on the underlying policy. So
I know there's a lot of young farmers or beginning farmers, to use the category, that are required by the FSA office, and I use required with air quotes, that have to buy up in order to protect an operating note amount or an exposure amount.
sure.
That can be expensive, but it sometimes is a necessary evil of being able to work in the farming business.
Yeah, I mean, frankly, there's a few FSA programs that have those requirements, but then just even on top of that, just to procure funding for your operating loans, sometimes banks will require higher levels of coverage. And going into a year like 24, I would expect a savvy lender to be like, yeah, let's take a look at what your crop insurance guarantee is, because what it might have been last year is $100 over cost. Now it might be $100 under.
Right.
So
Yeah, that was we talked about using tweets that you had put out there, and you've done a good job. If people want to find you at Throw Up in My Mouth Rye, Hawkeye Rye on X. But yeah,
Dude, how big of a fan do you have to be? You tag the Iowa Hawkeyes in your profile.
oh,
I do that. That was me.
Oh, I didn't know I did that.
I honestly did not know that.
But you did.
I might have done it on accident.
You.
I wanted them to know who I was.
I guess.
That's funny.
What a big fan you are. Throw up. So, high yielding acre in corn, estimated cost, you said, coming from Iowa State,
Yeah.
is $993 an acre. That's an estimated yield of 222 bushel per acre at $4.80. In order to get the coverage to cover your cost, you'd have to go up to 93%.
Right.
You'd have to be in a ramp
Correct.
type program
Yes.
in order to cover that. You stated here, because of the lower commodity prices, a 250, like we talked right at the top, 215 bushel APH is going to be a $200 or more less
Correct.
guarantee at the same level. You may have to buy up 15% more
Right.
to get that protection.
Hey, we talked to these guys down at the show.
We did.
Yeah.
Lori.
Yeah, from ever.ag.
There you go. Yeah, so to kind of put a capper on that, I mean, unfortunately, especially here in the state of Iowa, so many folks are already at 80 or 85%.
Yeah, so it's
and
not that
trying
option.
to buy up another 15% is literally impossible in
Yeah.
some cases. And the only way to get closer is through either ECO or one of these private products. So
That was kind of neat too when I'm scrolling your website here, fmh.com, looking at the private products. There's also Replant.
correct. A replant is a very big deal as you get further east. So talking southern Illinois, southern Indiana, Ohio, not only do they buy Replant, they buy it on every acre, and it has tended to be cheap in the past, frankly, probably cheaper than it should be. But Replant is definitely a big deal on beans as you move further east.
So what's Replant coverage? Just your cost to do it?
Correct. So there is a Replant coverage built into your multi-barrel policy, but the dollars that it generates are pretty small. So you're talking I believe the corn Replant payment, or let's use beans. The beans is more common. The bean Replant payment is based off 3 bushels. So if a bean price is $12, you get paid $36 an acre to replant. Depending on what you're getting in terms of possible free seed and all these other things, I don't know what the exact cost per acre of replant it is. Probably varies quite a bit from farmer to farmer, but you have the ability to buy a private add-on for replant that would pay in addition to whatever multi-barrel is paying already.
Okay. So I've never really put much into replant because we don't. Very seldom do we have to replant whole fields. It's usually just like
Spot them in.
potholes.
Mhm.
I feel like the most replanting that my family's done has been because of hail.
And those are always interesting conversations too, because it's never like, oh yeah, they're gone, or the times that they are, or froze, or they froze off.
Uh-huh.
And a lot of times they'll be like, yep, they're dead, and they'll go in and they'll plant right next to it, and then half those other ones came.
Sure.
And you don't need as many beans as they once thought out there.
True, yes, population, sure.
Yep.
No, it's the requirement for replanting under a multi-barrel, I believe it's 90% of your guarantee. So the threshold for being able to replant it's not a high one, and frankly, if folks are going out to replant, typically they're doing it for good reason. So
Right.
we're not going to try and.
So,
nickel
I
and
mean,
dime
Iowa
folks.
State custom sheet for planting, not with high speed. You're looking at $24 to $27 an acre is what they said. If you were to go do it for your neighbor,
Sure.
So that's what that covers fuel and your time and wear and tear and stuff like that. But yeah, like you said, like most seed anymore, if it's treated, it's free, or at least half or whatever, type of deal. So that you're just out your time and wear and tear and some
Correct.
fuel.
Correct.
So, yeah.
You got it.
So as we continue down the path of all things possible to discuss, I found
Oh, wow.
this on your website.
Oh, wow. You want to go here?
I don't even know what this is. So, Corey, it says PRF plus apiculture. Do you know what apiculture is?
No.
So the reason I clicked on this.
Apiculture.
Apiculture. So it's from the
Apiculture.
zoo. The reason I clicked on it is it has raindrops.
Sure.
So I assumed it had something to do with moisture. Oh, I guess I didn't even read it. It does say rainfall index.
Yes.
All right, so what is this? What is PRF apiculture?
Well,
It's an
I don't.
apricot
We
plant.
may have to check my numbers after I declare this, but if there is one crop, and I'm going to call it a crop, that we cover the most as an insurance industry, it's not corn or beans or wheat in terms of acres, at least. It's pasture. It's
Really?
rangeland and pasture,
Would you have guessed that?
and it's because of this.
I said it was apricots.
It's because of this. PRF it's a rainfall index policy, and basically, you can say, all right, I want to cover my pasture for 90% of the average rainfall, and if it falls below that, I get a payment. It's just as simple as that.
Can you do it on corn and soybeans?
You cannot. So it is restricted to pasture, rangeland, and forage. The only exception is apiculture, which is even more interesting. And apiculture is the exact same concept. It's about rainfall, but it's for bees.
Oh, apiaries. Yeah, that makes
Yeah.
sense. Not apricots.
And so I believe the theory there is that bees need the water because they need pollinator plants.
Yep.
Right? And so if we don't have enough rainfall, we don't get enough of those pollinating plants, and the bees suffer. So.
And money is going to bring them back. Right?
Well, you got
Here
something
you
to
go,
show
bees.
instead of that honey. I guess.
Right. You can buy more.
Right?
What a cool product that I wouldn't have known without going out to
Literally.
fmh.com.
Literally millions of acres are covered under PRF.
Right.
A lot.
So let's give you a couple minutes to brag on Farmers Mutual Hail.
Yeah.
I know that there's a lot of things that we learned from our Draco conversation, but we've got a lot of new listeners since then. So give us a little bit of background on Farmers Mutual Hail and what kind of sets you guys apart.
Yeah, absolutely. So I'll start with the company itself. It's pretty unique, and it has a unique story. Our company was founded by essentially a group of frustrated farmers in northwest Iowa, early Iowa, and this is in 1893, by the way.
So it sounds like Terraplex Ag just
Yeah.
120
Screw it.
years
We'll do
old.
it ourselves.
Yeah.
That's right. And that's basically it. They were frustrated with getting hit with hail enough. They decided to come together, form a mutual, and that became Farmers Mutual Hail Insurance Company of Iowa. At the time, and still today, it is managed by the same family, which is the Rutledge family. So for
Really?
the entire 130 plus years, the company's been managed by the Rutledge family. And they've also had a majority of our board membership, which if you think about your own family and think about running a business with them, I think it's pretty incredible that they did it for 130 years.
No kidding.
But on top of that, then, we are in the multi-peril business, but we are not owned by a reinsurance company. We are a mutual, so we're owned by our policyholders, which is unique as well. Most of the other crop insurance companies out there are owned by larger reinsurance companies that are typically foreign-based. But we have one home office in West Des Moines, Iowa, and that's where we run everything out of, but we cover coast to coast. Some things that set us apart, probably the biggest one is we're a pretty large innovator when it comes to precision technology and leveraging precision for acreage reporting, production reporting, claims, and even audits. And so we have connections with My John Deere and FieldView, where a farmer can directly send us their data. We can create acreage reports, production reports with that information, streamline things, utilize the technology as much as possible. And then lastly, it probably comes down to private products, and not just what the private products are, but I feel like we as a company do a good job of delivering strategies to our agents, and who are therefore delivering that strategy to their farmers as well.
So your private products are what you have to set yourself apart with, that and service and
Sure.
your other stuff, right? Because
Yeah.
legally,
Yes.
the federal crop or whatever
Correct.
insurance is all the same across every company.
Correct. Yes, all the rates as far as everything we talk about that's subsidized, the government sets the rules, they set the rates, and we have to adhere to that. Outside of that, we have more freedom with our private products, which we just have to basically clear through each state. But there is so much commonality in what we do. We have to set ourselves apart through private products, which is a very common way to set yourself apart. And then precision, I think, is probably the other big one. Some AIPs. AIP is a crop insurance company, approved insurance provider.
Okay.
Yeah.
Yes, I know. We love our acronyms. Some AIPs embrace precision a lot more than others, and I think we've definitely embraced it more than anybody else, and we would call ourselves the leader in the industry when it comes to precision.
I doubt in 1893 the government had federal crop insurance, standards.
Correct.
Right? I would love to have been in that room when they're like, well, this is how it's going to be now from the government, let's see what that's like. But here's a cool thing, Tanner. In 2015, FMH acquires John Deere Insurance Company.
That is correct.
How often do you ever hear of John Deere selling something?
That's right.
Normally, it's the other way around.
Yes. Yeah,
That's kinda interesting.
They divulged their crop insurance company in 2015. We purchased them, and that was really kind of the kickoff of embracing this precision route, because that was their whole goal.
Right.
Was to streamline those two.
Sure.
And so we took a lot of that tech and we've made it even better. And
that was
now
about
we
the
are
time
today.
that their tech really started getting good, because I would have called it for a while that old brown box, was
sure.
kind of secondary to other technology out in the industry. But now they're number one by easily.
Sure.
So
Yeah, that's good. Well, I got 2 questions left to
Sure.
wrap up. I know you can't sit here and tell our listeners, go buy this.
Yeah.
Go sign up for this. But what you can tell our listeners on an overall arching basis is I want a couple of good questions for them to ask their agent.
Well, I work with so many agents, I kind of want to flip that on its head.
Do it. Yeah,
So
do it.
I would say, if I was an agent, these are the 2 questions I'm asking a farmer.
Okay.
And unfortunately for farmers that probably going to get hit by a shoe is, what is your cost of production, right? You got to know that. And then what is your risk tolerance? And those 2 questions will help narrow it down tremendously, right? So if we know what our risk is, because our risk is our input costs, right? If we know what our risk is, and we know what our tolerance off of that risk is, do I need to make $50 an acre? Can I stand to lose 50? Can I stand to lose 100? And then we're hunting for that number in terms of a guarantee. So that's what we're looking for.
Well, we've got listeners that we like to make good students. So I think that they can go into their crop insurance meeting, and if they go into it and they say, hey, how was your day? Everything's great. My cost of production is X, and I want to be able to insure at least this much.
Mm-hmm.
Their agent's probably going to be set back a little bit.
They might pass out. Yes. I think that is not a typical conversation between a crop agent and an insured, but that's really what the risk is. If a farmer shows up, if I were an agent, which I'm not, I just work with them. If I were an agent and a farmer came in and said, well, what should I buy? My first question is going to be, what's your cost of production? Mm-hmm. It's almost like going to the doctor and the doctor says, what's wrong with you? And you say, I don't know. Well, I can't help you. Right?
my cost of production hurts.
Please tell me. You know what? That's a T-shirt. My cost of production hurts. And have like an X-ray.
Holding your knee.
Yeah.
That's good. Okay, then the last question. We ask the
For
same
you.
question to all of our guests.
Oh.
Oh, I'm going to hold mine then. If you've got more, go ahead.
I got a couple. I've heard, we've been trying to navigate the carbon markets.
Oh.
And then like cover crops and all that kind of stuff. And I've heard some of that stuff is like starting to get wrapped up in like where it's going to pay out in insurance.
Oh.
Is there anything like that coming down?
Nothing solid.
Or incentives?
Yeah, nothing solid, unfortunately. The closest thing that we had to anything that would encourage that was a cover crop program in which you could have gotten a $5 rebate on your crop insurance policy if you had cover crops the previous or the winter before. That program had funding, does not have funding for 2024.
Okay.
But the general tilt of the current administration is to have more programs like that.
Right.
So whether it be more incentives through maybe crop insurance, subsidies or products built around, who knows what could come, but nothing solid at this point.
And then I've always heard there's a net worth or something that kicks you out of being able to purchase subsidized crop insurance. Is there?
Nope, there is not. Nope, there is not.
Is there a limit?
There is not a limit.
So you could have 100,000 acres or you could have 1,000 acres.
Correct. Speaking of PRF policies, there are 100,000 acre policies out there for a PRF. There's just a lot of rangeland out there out west that we don't even pick up on.
Yeah.
But no, there is no limit. FSA has limits for your commodity programs,
Yep.
but under crop insurance, there are no limits.
I'm glad we asked that.
We?
Keep going, sir.
No, I'm good.
Yeah.
I had 2 questions, and that was it.
That was it. All right. We try to close the show by asking a question that we can compile answers to. The question we've been rolling with right now is how best our guests learn something new. So as you think about you're learning a new skill, picking up a new topic or something along those lines, how effectively have you, as Ryan, been able to learn something the quickest?
I think I learned the quickest by trying to teach somebody else, right? So if I can't, and this is what we do,
Those who can't
I'm-
teach.
I'm in, I'm in sales, right? So the first thing I have to do, so actually I have a coworker of mine. His name's Ken Ripley, and he farms in southern Minnesota, including doing the same exact job as I do. So my first goal is if I learn something and I want to try and sell it, I got to sell it to Ken first.
Yeah.
And I got to be able to find a way to say it in the right way that makes sense to him as a farmer. And if I did that, then I learned it, and I know how I can go sell it too.
Okay.
What was your aha moment sitting back here?
I had another question
All right.
from my notes that, which is standard. Standard. I just have to let it rattle around in my brain a little bit.
Yes.
Last couple of years, there's been, especially on Twitter, and I have not looked into it. My crop insurance agent tried to explain it to me. It just made me more confused. Margin protection.
Ooh. Yeah, we don't have enough time for that. No. Yes, margin protection, speaking of your question, is by far the most difficult thing that we
It's
sell.
so hard
It is.
to figure out.
At the end of the day, it's very similar to ECO. It's a county-based plan at 95%, but it has interactions with your underlying plan, and then it also has a input cost element to it, where if input costs are moving up or down, that can change your margin, and it can change your potential for a payment.
Who sets the input costs? Are you giving them your inputs? Is it just a general?
That is a point of contention in this,
Yeah.
I will say, because the contracts that are used, they use like point of sale contracts for diesel, for urea, and
DAP
DAP.
and interest.
And interest. There you go. Perfect. And so they have, I think it's the 30-day Fed funds rate for interest. I think there's a New Orleans contract for urea. Diesel's out of New York, and I don't even remember where they came up with the DAP. But it's not necessarily going to reflect a retail price that a farmer is getting. It is more going to reflect a general change in input costs.
Right. All of a sudden, we've got an oil embargo.
Yeah.
And diesel prices go through the roof. Is the
Yes.
only way it's going to probably.
But the guys were talking about it because, anhydrous or,
Yeah.
urea went, I
Yeah.
can only talk anhydrous because that's what we use. I know that better. But, it over doubled in price,
Yeah.
type of deal.
Yeah.
So,
There's years where margin has a little bit more relevance than others. If you took margin, you had to have bought it in September.
right. So there's that time frame that
Yes.
brings a whole nother fold of confusion.
Correct. So you would have had to buy it in September, but you were using prices in August and September to set that. So our margin prices were still at 5.11, I think.
Yeah.
And so compared to waiting until today, if you bought margin, you already feel pretty good about it because we've dropped 40 cents on our price. You could have bought ECO, which is also 95% county coverage, but right now you're 40 cents better off having taken margin.
So margin's better in a deteriorating market.
Correct. Well, when it's deteriorating from September through February,
Yes.
right?
But then it won't be decided until the next year.
Well, yeah. So all of these county endorsements, we rely on actual reported production from farmers, and RMA compiles that, and they won't release those final numbers until June of the following crop year. So you're buying, yes, so to your point, you buy the policy in September of the year before,
September 23.
September 23.
Yep.
You have your 24 growing season.
You harvest.
You harvest. We would not get a margin payment on that until June of 25.
Almost 2 years later.
Yes. Yeah.
So you're having to make a decision to buy it for the second
I'm
time?
gonna be belly up by then.
Or the third time?
You know, like
And I will sit here and I will tell you that margin is a policy that has a lot of complication. It's hard to explain. There's a lot of gotchas in it, and yet I would buy it because I think it's good policy. I really do.
I know a lot of the smart people that I look up to were preaching it, and then I just could not wrap my head around it. Mm-hmm. And I don't like buying something I don't know.
Right. We would need more time to dig in. I mean, even with a crop insurance agent sitting down with a farmer, that's probably an hour and a half conversation to make sure that everybody feels good about it.
Yeah.
Wow. If there was an easy way to make that an interesting podcast episode, I think we would
And I don't know what agents make on that.
Tanner, speaking of that, so we do a podcast at FMH.
Oh, good.
We call it the FMH Insurecast. And, yeah, I think trying to figure out how to talk about margin on a podcast was difficult, but we did try.
So that's this. There's a link right here on the website.
There you go.
FMH.com. Head over to the margin tab. Go all the way down to the bottom. Maybe you guys should move this to the top of the page.
Well, I don't make that call.
You at least didn't make it an acronym. You just came up with a word.
What's FMH?
Well,
Farmers
that's
Mutual
just,
Hail.
yeah.
It's an acronym.
But the podcast isn't some acronym. It's
that's
just,
true.
they just made up a word.
You don't know. We're pretty crafty. Maybe
Yes.
maybe it's a secret acronym. we can't tell you.
Inside new studio, you record. Yeah, we could get this. This isn't going to be that hard to do. Well, Ryan, I think we did a pretty good job of at least trying to make it entertaining. I know you had some old stories about me that unfortunately we're out of time
Oh no.
to tell. You'll have to tell Corey, and then he can tell everybody else.
All right.
But no, thank you. Corey, did you learn a lot?
I
do you
did.
feel
and
better?
I'm still confused. But it's
You
just,
could listen then.
That's my brain. I don't like this stuff. But
Yeah. Well, you can take what you wrote as notes, and then you'll listen to it again, and then go watch it on YouTube like every true fan.
Yep.
Yeah. Well, I am a self-proclaimed crop insurance nerd. So if you want somebody to ever take a look at your numbers, I would literally be happy to.
Reach out to Hawkeye Rye on X.
That's right.
Do you want to drop an email address or stick with Twitter?
Yeah, absolutely. If you have any questions, you can email me. It's rbennis, that's my last name, rbennis@fmh.com.
Cool.
Yeah.
You got anything else, Corey?
Do we need to put like a what do you call it? Disclaimer out there, like this is all opinions, like everything.
I hope we made that clear across the as we're going along here. But the differences in the cost of these products as we move from state to state, county to county, are tremendous. And what I tell a farmer in the middle of Iowa versus what we say to somebody in North Dakota is a completely different conversation. Yeah. So
No, that's good. Well, listeners, thanks for listening. Go find Ryan and Farmers Mutual Hail, and come back next time.